to the Mortgage Rate Weekly Market Update for the week of July 23rd, 2018. Hello, I'm John Thomas with Prime Residential Mortgage. Here to give you an update. Well, last week, mortgage rates ended the week about where they started. Take a look at the bond chart on the screen. You can see mortgage bonds back near the beginning of July tried to break above the 100-day moving average. They did it one day, but then the next trading day, you can see they fell back below that tough overhead ceiling of resistance, and we've been stuck trading in that sideways pattern ever since. And then you see the green candle there on Thursday. We made a run at the 100-day moving average, but then on Friday we returned lower. Bonds sold off, and we closed below the 25-day, but above the 50-day moving average. So we're stuck right in the middle of that tough trading range. We're going to recommend, if you're closing in the next 30 days, go ahead and lock your mortgage interest rate. A lot of volatility here. If bonds can't break out of this, you're going to be stuck about the same rate. If they break out lower, they got a lot of room to run, so you can see rates spike higher. If they break out above the 100-day moving average and stay above that, we could see rates move lower, but they haven't been able to do that for several months. So we're going to recommend next 30 days, lock your mortgage interest rate. If you're 45, 60 days or longer out, you could float, but again, if they break below the 50-day moving average, we quickly switch to a locking stance for everybody. Now, if we dig into economic news, big news economically across the globe is the U.S. dollar is strengthening against other currencies, especially the Chinese yuan and the euro. So what that means is the cost for people changing their currency, the U.S. dollars, to buy stuff in dollars, it's more expensive because the dollar is stronger, so they have less value. Now, if you're going to another country to spend your dollars, you'll have greater buying power. So the effect, though, on U.S. real estate is a negative effect because part of the market is foreign buyers coming in to invest in the U.S. real estate market has been very strong. But, for example, if you're a Chinese investor in the real estate, if you would have to pay 8.5% more now for a house than you did because the currency exchange has changed by that much. So when you change your yuan to your dollars, you lost 8.5% buying power. So if the dollar keeps strengthening against other currencies, it's going to probably hurt the real estate market as we have a slowdown in foreign investors. Now, the situation could get worse before it gets better because the Federal Chair, Powell, said that he will continue their gradual rate hikes to the federal funds rate. And what that does is every time they hike that rate, it's going to strengthen the dollar, which is going to hurt real estate investors that are foreign. So we'll have to see how that plays out. Now, in retail, we did see a big report on the economy. Retail sales for June 2018 were up 0.5% from May of 2018, as reported by the U.S. Commerce Department. May was revised higher from 0.8 to 1.3, so that's great there. So retail sales have increased 6.6% from June 2017 to June 2018. So retail sales is a measure of consumer spending. If retail sales are doing good, the U.S. economy is doing good. So consumers were spending. If we dig into what they were spending their money on, they were spending money on healthcare, personal care, motor vehicles, gas, non-store retailers, and food services were the big players in the retail sales increase. Now, if you look at average retail sales for the past 5 months, from February through June, it's 0.58% increase on an average. So we're right about the average for June. So very good report there. Then we saw weak initial jobless claims come out on Thursday. Amazing, 207,000 claims. That's a drop of 8,000 claims from the previous week. The lowest level in 49 years for weak initial jobless claims. So this shows a very strong labor market. Employers are holding on to their workers. They're firing less. This is also going to be the sample week for weak initial jobless claim used in the jobs report for June 2018, which comes out in the first Friday. July jobs reports come out the first Friday of August. So with the record low weak initial jobless claim, that points to a very strong jobs report. There's other factors that affect that, but just based on this, very, very strong jobs report, healthy labor market. Now, in housing news, we saw some measures on new home construction, 2 reports. Housing starts for June 2018, they plunged from May by 12.3% to an annual rate of 1.173 million units, well below expectations of 1.318 million units. So U.S. home builders broke ground on fewer homes in June, and it was the lowest level of housing starts since September 2017. So part of that could be the tariffs could be coming into play. We'll have to see as that plays out. We also saw building permits for June 2018 decline 2.2% from May to an annual rate of 1.273 million, which was below expectations of 1.330. So building permits is a sign of future construction. So if that's slowing down, we would think to see housing start slow, and then the sale of new homes closing would slow. So we'll keep an eye on that. 1 month doesn't make a trend, but we'll see what's happening. Now, home price appreciation forecast for the next year. Take a look at the screen. You can see state by state price appreciation projections from July 2018, July 2019. So in the local, we got Delaware appreciating 3.7% on average, Maryland 4.3%, New Jersey 5.4%, and Pennsylvania 4.7%. So we're all right there around a very good historical price appreciation. Those are sustainable levels. If you've got something closer to 10, those are not sustainable and may create a pullback eventually. So that's great numbers for us locally. And then in the local news, we got the next free first-time homebuyer seminar this Saturday, July 28th in Newark, Delaware from 10 a.m. to noon at the Christiana Hilton Hotel. And then we're back there again on August 22nd from 10 a.m. to noon, Christiana Hilton. You can register for one of those events. Give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. If you guys got questions, need a quick, fast pre-approval for any loan type, we are here for you. John Thomas' team would love to have an opportunity to be your lender. You can find us online at DelawareMortgageLoans.net. Have a great week.